それでは京都大学レジリエンス
From Kyoto University Resilience Research Unit, we have Professor Aoki with us who will speak next. Let us move on to that presentation. Ladies and gentlemen, good afternoon. My name is Yasuki Aoki. Professor Mitchell, Professor Fujii. Their presentations were so excellent, so much so that it's very difficult for me to speak. But I would like to speak in plain terms to the extent possible. I hope you will listen. In the interest of time, let's start. Today, I would like to discuss MMT theory, its thinking, mainstream economics theory, the difference between the two, and based on that, I would like to take a look at the phenomenon of money creation in modern world and say that MMT's expertise or knowledge is very relevant. So the title of my presentation is MMT and the process of money creation, facts not explained by mainstream economics. So let's take a look at my slides. So these are the points of discussion. There are 5 of them here. Number 1, the greatest difference between MMT and mainstream economics in terms of their views of money. To give you the conclusion first, MMT says that modern currency, modern money, is inconvertible. It cannot be converted from or into metals such as silver or gold. It's inconvertible. So it's just a piece of paper or a number entered into a bank book. That in itself does not have any value. But then, why would we receive the currency? Naturally, because it's based on confidence. A confidence underlining the currency makes it valuable. So, as I will explain in detail later, in mainstream economics, metals such as silver and gold, the currency that they talk about is convertible currency. That is their assumption. It seems like old school, but that's what they're based upon. Now, second, MMT and mainstream economics, there are such differences as I explained. And what are their academic roots? I would like to be brief on this because if I go into detail, it will be lengthy. I shall be brief on this. And as I said earlier, the contrast in terms of the view of money between MMT and mainstream economics. That is my main topic. Mainstream economics, having said so, it's broad. It's a system of many theories. At the very pinnacle of mainstream economics in terms of policy is what is practiced by the central bank, their monetary policy. And there's this common awareness that is a new monetary consensus. So that's what I would also like to discuss. So MMT contrasted with mainstream economics. That is equal to MMT versus common consensus that is upheld by the central bank. But then monetary policies around the world have hit a wall. That's what I will also like to discuss. Number 4, mainstream economics' view of money has fatal constraints or fatal defects. And the greatest defect is that the money is being subleased. Money held by someone is subleased to someone else, and then subleased to yet another someone. So money is being subleased from one to another. And of course, that cannot be done by commercial banks. So exogenous money supply theory. I may talk a little bit about that as well. And last point, last but not least, the process of money creation by the central bank. I would also like to talk about that. So money creation or credit creation by the central bank. The point here is that there's no funding source necessary. So increased government debt, what impact would that have? JCB issuance balance going up. There's this issue of redemption, and there's a problem there. So that's the rundown of points I would like to cover. So point number one. Just briefly, I would like to take a brief look at the history of Keynesian economics and neoclassic economics. MMT at the very bottom versus central bank's monetary policy, the dichotomy between the two. So Keynesian economics and neoclassic economics, members of the audience, some of you may know about this. This started from the Depression in the 1930s. Mainstream used to be neoclassic economics. Until then, they could not come out with any effective prescription. And that is why there was this rise of the Keynesian economics. Keynes came up with a completely new macroeconomic theory. So that's how they started. If there is a difference between the two, neoclassic economics says that members of the society are all homo economicus. And they collectively decide the macroeconomy. So collection of micro equals macro. As opposed to that, Keynesian economics says that there are rational persons in the society, but there are those irrational members as well. So if that is a given, all macroeconomic activities cannot be attributed to individual activities. I could be lengthy, so just one point here. Both Keynesian economics and neoclassic economics have broken into two branches. For the Keynesian economics, post-Keynesians and bastard Keynesians. The difference between the two is bastard Keynesian removes uncertainty from the Keynesian economics. It upholds the equilibrium theory, and MMT belongs to the post-Keynesian economics. Uncertainties are part of the assumption for MMT. On the other hand, neoclassic economics in the 1970s, Robert Lucas, who's a Nobel laureate, came out with Lucas criticism. Macroeconomic phenomena should be explained by microeconomic reasons. So that's become modern economic filter. And unless you're part of the filter, you do not qualify as an economic theory. And what passed through the filter is the new classic economics and new Keynesian school of thought that takes into consideration incompleteness of information. Stiglitz, Krugman, Bernanke, these are all new Keynesian economists. And central bank's monetary policy, which is juxtaposed against MMT, is based on the new Keynesian theory. Now, The difference is in the approaches between MMT and central bank's monetary policy. MMT, in a nutshell, is a practical approach. As you look at the money, MMT takes into consideration the practice. More specifically, as I said, modern currency, modern money is inconvertible. Its generation, its flow, circulation, and elimination can be practically explained by double bookkeeping. Money is a debt of the central bank, and so money or currency is the central bank's debt, and inconvertible money is created by credit creation of the commercial banks and the central bank. And currency circulation between macro sectors, money shifting from one sector to another, can be captured by flow of funds identity. I'm sure you know BOJ's flow of funds statistics, and there's identity that underlines the statistics. Based on that identity, you can explain this. So MMT's practical explanation is such that it is not based on specific economic theories or ideologies. Having said so, there are various economic theories and ideologies. You can connect MMT with those, but actually it's irrelevant. Now, central bank oppose a theoretic approach. New Keynesian model is the foundation. Based on that, they steer short-term rates or policy rates. So Say's law and New Keynesian, there's 3 equations. I will not go into detail. So practice versus theory. You would think that theory is high-minded, noble, and you think that it would be positioned higher than practice, but that is not necessarily the case. A theory cannot be established without premises or assumptions. So New Keynesian model, it's a theory that passed the Lucas filter. So it's an economy that follows equilibrium, homo economicus should be the member, Say's law applies, and so forth. So what is the process of policy rate determination by the central bank? A central bank can determine the nominal interest rate, but this is neoclassic New Keynesian model. Economists usually think in terms of real rates rather than nominal rates. Many say so. So you convert the nominal interest rate into real interest rate. You use the Fisher equation, expected inflation rate, and target inflation rate sometimes, and it says it's constant. In the ordinary model, it's constant for the reflationary economists, and this expected inflation rate was to be moved. So what was the target for the real rate? And that is the neutral rate of interest. In the past, the term was natural rate of interest, but today we use the term neutral rate of interest. What is it? Well, in the loanable funds market, when savings are equal to investments, then that rate is the neutral rate of interest. What is a loanable funds market? You would think that it's a market where money is being lent, but this is a real economy model. This is a place where capital goods are leased and borrowed. That is the loanable funds market, and we're talking about the rate there. In the case of mainstream economics theory, as an analogy for loanable funds market, they look at the financial market. So real rate of interest is determined by the financial market. So it's the funding cost of the capital goods. And a neutral rate of interest is the rate where supply and demand is balanced in the loanable funds market. So in other words, it is the rate of return. So if these two are equal to each other, economy would stabilize. So that is what the central bank would use as an explanation. However, the monetary policy, which is an embodiment of the knowledge of mainstream economics, has hit a wall. It has hit its limit. Here it says limitation of monetary policy. Switzerland, Germany, and Japan, 10-year yield is in negative territory. Worldwide nominal rate is underwater. In the case of the US, if you consider inflation rate, the policy rate is close to negative territory, some say. So given this situation, what is happening in Japan? For about twice, although negative rate was lifted, for the past 20 decades, we have been effectively in negative territory. ECB, even before that, has started negative interest rate policy. Short-term rate is minus 0.5, so very low. Well then, when interest rates are underwater, why is the economy not performing very well? You would naturally have that question. Let's take a look at what mainstream economics has to say. When interest rate is zero, commodity price is not rising, and that is because neutral rate of interest is negative. It's lower than the real rate. That's what they often use as an explanation. As we saw earlier, a real rate is funding cost, and neutral rate is rate of return. Funding cost, if it's higher than the rate of return, no one borrows money to invest. That's what mainstream economists say. However, neutral rate of interest, it is very difficult to estimate that. And actually, it must be moving, some say. So it's very difficult to ascertain what the neutral rate of interest is. So traditional monetary policy no longer works. And as you know, since 6 years ago, 6 or 7 years ago, BOJ has engaged in QE, reflationary school of thought. So non-orthodox monetary policy. And with monetary policy alone, we should be able to navigate through these difficulty and steer the economy. Base money was increased by 370 trillion yen in the past 6 years, and expected rate of inflation was to rise by 2 percentage points. And look at this minuscule number. BEI is very low, so I think failure is obvious. Well, then everyone starts to ask, well, if monetary policy doesn't work, you have to rely on fiscal policy. Normal people would think that. But then the mainstream economists say that it has to be based on monetary policy-centered approach. Fine-tuning should be done by fiscal policy. You should not try to use fiscal policy as the main tool to steer the economy. Unless you say so, you will be criticized as economists. Today, why is interest rising for MMT? Naturally, that's because MMT provides the theoretical rationale for leveraging fiscal policy. Now, mainstream economics being a theory of subleasing of money. As I said earlier, mainstream economics started with real economic model, a bartering of goods. So, someone's thing is leased to someone else. So the amount of things remains the same. And just like that, mainstream economists look at the market. They only look at financial intermediary function. So someone's cash is leased to someone else, that is the only situation that they think about. So it's subleasing of money. The total amount of money remains the same. In other words, money is not generated within the private sector, so exogenous theory. Mainstream economics textbook talks about money creation. You need to once again read that. You have to deposit cash with a bank, and that commercial bank leases that money to someone else, and you generate a deposit as a consequence of multiplying effect. But it's just a subleasing of money, as I said. So non-banks who cannot take deposits, those who cannot issue bank books, mainstream economists only think about those non-banks. This does apply to metal currency. If it's convertible currency, if you buy something with that currency, it means bartering between the currency and goods. So mainstream is about subleasing of money. And the mainstream economists cannot explain the real money creation. What about MMT? So mainstream economists talked about subleasing of money. And here, MMT's money creation. Commercial bank who can take deposits, give keystroke money. That means loans do not require funding source. Deposits are not utilized for loans. Even if you don't have loans or lending, all you have to do is make an entry into the deposit book. You write the number, keystroke money. Therefore, this is a simple fact. If lending increases, deposit in the private sector increases, and if payment is made, then deposit in the private sector goes down. Private sector deposit increases or decreases depending on the demand. So central bank cannot control the deposit in the private sector. So this is endogenous theory, according to MMT. What is important is this. There's one thing that's important, and this was mentioned by Professor Fuji. Political funds or demand for funds. If you have funding by JGB, and that would clash with funding from private sector, you would try to have competition between the public sector and the private sector, crowding out. So public sector crowding out the private sector. Rates are up. So the resources that are supposed to be in the private sector are taken by the public sector. That phenomenon would not happen. Demand for funds in the private sector is fulfilled by keystroke money by commercial banks. So it does not clash with government spending. That's very important. Rates do not go up, they go down, although I will not elaborate on that. So MMT's money creation process, in that, what is the role of central bank's money creation? Let's touch upon that. BOJ in the last 6 years, as I said, conducted QE worth 370 trillion yen. They bought JGBs. So where was the funding source for 370 trillion yen of QE? Did they have that deposit? No, they didn't have that money. This was exactly keystroke money. So they just made entries worth 370 trillion yen into the deposit accounts at BOJ. So was QE wrong? this does not violate Article 5 of the finance law. Why no violation? That's because this is monetary policy. This is monetary policy. There's no government filter. So in the current accounts of BOJ, if corporates and individuals can have accounts, what would happen? You can deposit money with BOJ. And this is the idea of MMT's consolidated government idea. It says ... This is fiscal policy. So government working with BOJ, if they can do so, this is possible. But the actual operation is like this. BOJ, or central bank, in exchange for issuing JGBs, they credit government debt account, government deposit account. So they would go through government deposit to effect fiscal policy. This is about monetarization. So BOJ taking on JGBs, there's those who hate it, but this is done by every country every year, and this is monetarization. So central bank buying sovereign debt. Unless that happens, you cannot execute the budget. About sovereign debt issuance and redemption, I would like you to be aware of the 3 facts, 3 points here. Point number 1, if sovereign debt is absorbed by the market, issuance of sovereign debt in itself generates its own funding source. You don't need a funding source. So there are 4 arrows. It's in circle. This is reserve money going in circles. So reserve money becomes a government deposit. It goes around, circulates, and comes back. You can do that in many cycles. So there's about 400 trillion of surplus in BOJ reserves, so you can do this perpetually. And BOJ purchases the red arrow. So have net increase the same amount in the private sector and the public sector. Well, if you know the balance sheet, you can do that. And JGB redemption with a tax collection will reduce private sector deposit. You will lose money. So if you use tax revenue for JGB redemption, private sector deposit goes down. And JGB issuance would increase both private sector deposit and BOJ reserve. And this is commonsensical around the world. Sovereign debt is refinanced all the time. In the case of Japan, there's this 6-year redemption rule. And therefore, based on this rule, fixed rate of repayment is made from general accounts. So 1.6% is being repaid from tax revenue. And this is done only by Japan. In major countries, there's no specific rule as to how sovereign debt should be redeemed. They usually issue refinancing debts. Moreover, in general accounts, there's no allocation for public funds or redemption expenses. Germany is an exemption, although they don't have the cash rule. And interests, however, are part of general accounts. So it's only natural that total government debt balance goes up. If we look at MOF statistics, the balance of debts goes up and up, but it's the same with other countries. Between 2001 through 2018, we compared the increase. In the case of Japan, 70% increase, but France, the United States, and the UK, much more than Japan. In the case of Germany, 1.5 times, 1.6 times, a little less than Japan. And Japan's total government debt as a percentage of GDP being so high, and I think you already know the reason, for 20 years, Japan has had the lowest growth rate, absolutely lowest growth rate. And so it's only natural that Japan's debt amount as a percentage of GDP is highest. Now, this is my opinion, but I think it's realistic to explicitly introduce JGBs of sovereign debt in order to expand. MMT's consolidated government theory is such that central bank's creation of money to the government is ignored. But then in reality, we have JGBs or sovereign debt, so we should utilize that, reinterpret it, MMT, and use it as the basis for policy. And the consequence of BOJ's money creation is that it only increases BOJ's JGB holdings. But with QE, BOJ can take on JGB, and that would bring about a very different economic effect. We have not been able to break away from deflation for the past 20 years. And therefore, there's absolutely no reason to be concerned about JGB issuance increasing. All we have to do is refinance. That is the reality. But mainstream economists think that government is the same as a household. And their thinking weighs heavy on our back. We have to break away from that, but it's very difficult. Keynes said as follows, it's much more difficult to discard old thinking than accept new thinking. But MMT is true, so no one can reject that. So I hope that MMT will become prevalent as a new school of thought very quickly. With that, I would like to close my remarks.